Good afternoon. Welcome to Options Tender. It is Tuesday, October 15th, 2024. Welcome, everybody. So we're taking a look at SPY on the multiple time frames, and then we'll go around the horn. But I want to focus on three topics here. We're just now getting a market top, okay? I know that I called it on Friday as a day off. But there's still some work to do. So we're going to talk about market structure, breadth, why we shouldn't be extremely bearish today, even though we had a wonderful day today catching the turn, and rotation. Okay, we talked about rotation coming up in the last few weeks between negative tech and positive small caps. That's happening right now. And so they all kind of fit in together, okay? So right now we can talk about, well, hey, I'm not necessarily talking about the breadth here, the indicators, even though I'll post that video later on. We did get a sense yesterday that the put-call ratio was getting extremely contrarian bullish. Therefore, we're looking for a turn bearish. But I'm talking more of taking a look and why I have my grid set up this way, my watch list. Okay, and with our breadth, in this sense, it's a relative strength of the small caps here, and a couple of the mega tech stocks holding up the market. Without these three individuals here and the small caps headed to the downside, then we can't expect too much to happen in the overall market. The SPY is down almost 0.4%, but that's probably not going to happen, not a whole lot more, unless we see those individual stocks dump and we see a turn in the small caps, which I don't see that happening yet. I feel actually like it's breaking out, and so we might have some more stalling in the daily time frames to happen. So this week possibly could just be a doji week, and we'll take a look at all of this, okay? So if you're strapped on time, go ahead and move that speed of the video to 1.25 or 1.5, all right? So all these things that I'm talking about, that's rotation, going from tech to small caps. Structure we'll talk about on the 65-minute. Breadth is the fact that we're looking at some things holding the market up, some things dragging it down, NVIDIA being the main culprit of that, along with the SMH. Okay, and so that's kind of giving us a mid, not a big move kind of day in the overall market, okay? So, and another thing, somebody had mentioned in the comments, do I go over bonds? That's kind of a boring subject for a lot of people, even though the bonds are probably the most important aspect of the market. I don't go over them often. I have some past videos. I'll put those up as well. And those are starting to play out. So as the bonds, this is the 10-year, 30-year, 2-year, as those go up, then rates go down. Rates are forcing the market into a recession. Okay, not the Fed, it's the bonds. All right, so a lot more detail in those other videos. Here we go. So let's go ahead and jump into SPY in the monthly time frames, and then we'll go around the horn. Okay, so we have the monthly 2000 top, 21 top, 24 forming a top right here, right now, okay? We have bearish divergence. We went over those already. We're not going to go back over. You can check out the last video. Let's go down to the weekly. Weekly, we have bearish divergence. Again, yesterday's video. Now we're getting rejection off at the top of this channel. Okay, I say channel. This is a trend line so far, but a channel if, we get a good test of it and maybe a bounce off of that bottom of that channel. We only have 1 point so far. So the trend line up here is very valid. We're getting a reversal off it. And speaking about that, that candle there, potential reversal candle, maybe that's all we get this week because of the strength of the small caps as opposed to the weakness of the Qs. So this might end up just being a doji, and then we'll possibly get a reversal later on in the small caps, and we'll take a look at those for the targets, and then we can start moving down. That doesn't have to happen. That's just a scenario. This could continue to do some sort of cloud cover. It can continue down to the 8 EMA. Who knows, right? So we need to see the small caps reverse, though, and also those individual names. All right, we did by the way, we're doing this intraday, this video, at about 12:22 Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member for that access. There's also other benefits as well, but we just did for the individual analysis, we did the NVIDIA individual stock analysis. Okay, so let's go down. Let's change the board here. Give us a different look. So right here, we're getting the small caps are going up. Right here, we thought we had a top with this individual week right here, 1010. It wasn't, but it's a cluster. So we had the next one. I'm going to hide this one. And now we're getting our reversal off of the 1014. So our next point of reference is all the way into December, the middle of December. So is that where our bottom could be? Could we top here and a bottom in December 15th? We'll see. We'll see what happens in between. And I'm not pointing out that this is where it goes. It's just a down arrow. It could be here. We could be getting some sort of head and shoulder. Could be going all the way to the 382, which would be a valid spot for wave 4. So the bulls will argue from this point that they're going to be bullish and get new highs, okay? But maybe we just get a bounce into clusters, a lower high, and head lower, okay? That's what I'll be looking into. Let's go to the daily. On the daily time frame, we had this bearish rising wedge. We broke down from it. And by the way, those targets, you saw those targets came from this correction. All right, on the weekly time frame, you can go back if you need to. So we have the top of the channel here, top of the wedge, got back up to that point. I didn't think we'd get to there. I was open to it. We thought we would stop right here, 580. All right, so we pretty much took back all those gains. Now on SPY, I have to be adamant about this. On SPY, we have not broke down from the 580 yet. Remember yesterday, this was our resistance. Now it could become support. So our sell signal is going to be under 580. We'll see if that happens. We could get a couple inside days. This could be a doji week. And price action just kind of floats above here without many catalysts going on. We have earnings, but not much as an economic catalyst, okay? So we're still above the 8 EMA. It's still in a bullish posture. So I have to respect that. This is what we're kind of looking like in the long term. It's our ending diagonal. Let's just extend this. Okay, so this is a pattern that I think is complete as of yesterday. We have an ABC for 1, ABC for 2. Look up ending diagonals, you guys. Look up that pattern. They're made up 3 waves. It's not a typical 5-wave set of 5 waves, okay? ABC for 3. Right into our target, our major target, 162. ABC for 4. ABC for 5. And I do believe that's complete. Right to the top of our pattern. Did not mean to move that. So you have the 5 of 5 of 5. Lots of 5s. And we talked about the big picture already, so you got to go back in those videos if you want to get that. All right, moving down to the 65. Then we'll go around the horn. Okay, so on the lower time frame, we needed to complete some of those objectives as well as some of those targets. So we had another bearish rising wedge in the 65-minute. And remember, we use these 65-minute candles, so we have even trading candles throughout the trading day. Sorry, that's a mouthful, but we want even candles. We don't want a half candle at the end of the day. So that's why we do 65 minutes. All right. So this bearish rising wedge got to the top of the wedge and rejecting off of it so far. It feels like a bearish day, but come on, you guys. This move is nothing. I mean, remember what happened here. Look at that. We're going to see those again. Believe that. But above this 580, we're still, in a bullish stance. I'm not bullish at all. I don't have any, I've Boeing on for calls, but I took the IWM off already. Clearly premature, but the Qs are making up for that. So, all right. So we're looking for the rejection here. Do we get a new high? Sure, it could happen. I don't think so. But really, what I want to explain on this traditional sense is we have to break down from this form of resistance, and I'll show you that resistance area. But now we have to form market structure. Okay, this market structure, we need an impulse wave. This could set up in multiple different ways. A 1, 2, 1, 2. It could be very crunchy, scrunched up, 1, 2, 1, 2, and then break down. We in other cases, it could be like the Qs where we get a nice sharp move to the downside. Then we get a bounce to form market structure. We need lower lows, lower highs, lower lows, lower highs. This can form in many different ways. Sometimes it takes a few 1, 2, 1, 2, 1, 2, and then it moves. Or it just has a steep move to the downside. We'll see that in the Qs, okay? And then it starts to stretch its legs. So when you get, and I'll emphasize this again on SMH, when you get a large move and the market is relatively mediocre to the downside or upside because there's relative strength in something else, better believe that you take profit, because that could be dragged back up. All right. And it take time away, especially when you're in shorter date contracts. Push those contracts out a few weeks, couple weeks, a few weeks. Heck, just another week. All right. Give yourself some time to win. All right. You're already winning if you catch the big move. So either take profit, roll out, save yourself $100, put it in your pocket. Or buy, as Jim Cramer says, buy yourself a sweater. So either way, I used to watch Jim Cramer all the time. Not anymore. It'll wreck your mind. It'll ruin your trading. So I regress. All right, we had our time frames here. Already passed. Now this one is our top here for yesterday. We had our top off of this time relationship right there, included with the weekly time frame. I didn't do the daily, did I? Okay, so now after having other moves, we're looking out to the 16th, which is tomorrow. So do we get a high into tomorrow as a 1-2? I don't expect this to be a low necessarily, but wherever time and price meet up, we'll look for a trade. Okay, so the 18th could be a low, 16th could be a high, could be any of those moves. But I think this is just the start. I think the top is in. I thought the top was in on this 127. That's a big zone for us at this 580. So we'll look for confirmation of this move under 580. All right, doesn't want to go up and finish some business here at the 138 retracement. It's a 586. That's possible too. if the small caps want to drag us up to this point, and that could happen if the Qs just need to bounce. Then they're diverging. The market goes to a new high, and the Qs have a lower high. That's why we don't know those things, so that's why we need to prepare by giving us more time. We only have 3 more trading days in the week. Okay, so the Qs. We see that we have a lower high here, a bear flag forming. We're gonna break down. It's a matter of when. We're gonna break down from this bear flag. But what could happen, and it could be happening right now, is we have an initial 1, 2. This could be setting up another 1, 2, and then we go lower. That's what I was talking about. Or this could be a 1, 2, 3, 4, 5. What matters is that we're starting a bearish market structure. This is in its infancy. All right. Really, we have a lower high from that high up there. So we're relatively weaker in tech. So that's why I'm pushing tech so much on the downside. We're not shorting IWM. And now we're just getting a 1, 2, possibly another 1, 2. And if we get a bounce here in tech, it's not going to be pulling the market down anymore. So we'll in the small caps, we'll pull it up. So we could technically get a new high in SPY. All right. Which I'll short again. You better believe it. All right. So we think that the top is in for tech, or we have our impulse wave down here, and we have an A, B, C into this 887 zone, and we're getting a push down. So starting to form some market structure. Look at this move here. For example, this could be very similar. This would be an impulse 1. We figured that out in hindsight. Okay, we didn't figure that out right away, but it looks impulsive. It's a big move, and then we have a 2. That's a straightforward 1, 2. This and notice this next move. That's what could be happening right here. This next move had a 1, 2, 1, 2, forming the structure, and then boom. So there's many different ways you could do it. Look at this one, just choppy, 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 and finally extended. That's what I'm talking about. SMH, same thing, bear flag. Getting this huge move to the downside, right into the options expected move. That's a hedging point for the big traders. So this we took profit on it. We had expiration in the 18th, huge move, a 3 times move, took profit because we knew that support was here, and then we had the options expected move. Okay, so if you don't know options expected move, you got to look through my videos. All right, so took profit and extended out. And I extended these because it was such a big move. I extended them out to the SOXs. I did the inverse ETF, extended out to the end of November because I already had some other ones a little bit sooner than that. Okay, so this here could be a 1, 2. It could be a 3, a 4, and continue for wave 5, but we don't know that. Okay, it could be a 1, 2, 1, 2, and just extend more down there. This has to unfold until we know that we see like 5 waves, like an impulse, and we start looking at our indicators. It's already oversold, but we don't have divergences or anything. It's not like we're curling up. We're not curling up here, so it doesn't necessarily have to be over, but we're getting extended in this move itself. So this could consolidate sideways and then break down a little more. We just don't know. But what we do know in a probabilistic way is that this is going lower. The setup is going much lower. And so that's why we gave ourselves plenty of time, well over a month and a half of trading days, in order for this thing to continue lower. I know I'm beating a dead horse, but that's what I have to show. Here's IWM. IWM's breaking its highs here, so it's breaking out. We had a bull flag. I think this might be better on this point of view, 65. We had a triangle breakout, back test, It's what we were looking for before, but we didn't hold on tight because it took so long to happen, and the market was already making a peak. So I'm not worried about this. I'm not missing out. I'm not FOMOing on it. This thing could keep going. All right. So this is the next top it could test. Okay. So we know that this isn't going to get a lower high here. We're already breaking up the high. Now you have two possibilities. This could simply end right here at the 786, and that would mean this is an ABC, some sort of ABC here. Or let me go to the big picture. So what we were looking for, and now we're starting to get it, I'm starting to lean towards this being a wave 4. One, the ending diagonal. First of all, yeah, the top here, an A, B, and then we're looking for this to be an ending diagonal. 1, 2, yeah, that wave B there. 3, 4, and now 1, 2, 3, 4, and 5, up to the possible 235. That's still 10 points away. That'd be a huge move, okay? But it doesn't have to. The 5 could be here, and the 4 could be right in this little dip right in there. And this could just be a lower high at the 786. So get above the 786 and hold above 226. Hold above it and push above, especially if you get a high over here. Next target is 235. And that would drag the market with it, okay? Last thing's the VIX, and we'll get out of here. Get this video out to you. So the VIX is in a setup in itself. First of all, we have an inverse head and shoulder starting to break out. And now we're looking at this being a bull flag. So if this starts to break out from the bull flag, you know, it could be just a lower high and then comes back and tests the inverse head and shoulder, comes down to the options expected move, the 200 moving average. That wouldn't, I mean, that's still just a back test of this downtrend, which is the neckline for the inverse head and shoulders. So that's still in play. We'd close the gap. So if the VIX starts to close the gap and do all that back test stuff, then it's likely that IWM is really pushing to the upside. All right, even though the Qs are weak, they're not going to make a new high. I highly doubt they'll make any new high. And this will kind of keep the market, like we looked on the weekly time frame on SPY, probably just get a doji and not have any more downside for the rest of the week. And then we'll look for the continuation next week. If we start to break out from this falling wedge, this bull flag, then a whole nother situation, especially if we start breaking the highs of 23. All right. So that starts breaking to the upside, then you better believe the market is done and heading lower. And the VIX, it's going to break this 55 high. It's going to break it. All right. You guys, thanks for subscribing. Thanks for the likes. We'll talk to you soon. Have a wonderful day.